All right, we welcome the Treasury Department from Nedbank Eswatini as we zero in on what markets are looking like today. And of course, just a bit of highlights we are seeing in Forex. There's a bit of some strength on the rand and commodities, strength on the gold, while prices are dipping on oil, and with equities, S&P seems to be doing well, yet the FTSE 100, not so much in England. Let's have Sandziswa Dlamini help us understand these numbers. Ngosi, welcome to the program. It's been a minute. Hope you're doing well.
Good afternoon, Sfiso, and good afternoon to your viewers. As you have rightfully mentioned, the highlights of the market, we are currently seeing a lot of movement in the markets.
Yeah.
I would like to first start with the FX side, where we are seeing a lot of reactions. So the rand is currently strong, and this is mostly at the back of the South African government, or South Africa, having a very successful G20, which positions South Africa as a very strong country and a lucrative investment destination in the continent. We have also seen a few announcements on few developments in the past few days, where we have seen South Africa being improved in their credit rating. So they have improved credit rating. They have also been removed in the grey list, which now means that they are now more lucrative, or they are able to attract more investments, especially foreign investment from European countries or even the US, even though on that other aspects of the US there are still tensions. So this is great news for SA, and they continue to do well. And on another portion, just to highlight for the rand, it's a big opportunity for Swazi industries, South African industries, especially if you are an importer, because now it means that if you are importing from the US or you are importing from other countries, and those transactions are denominated in US dollars, those goods you are not necessarily, but technically you are getting them at a cheap. So we encourage Swazi clients to take advantage of this opportunity, because it might not last for that long.
Yeah, I think it's important, and thank you for advising our Swazi clients, because when we look at these numbers, we really want to understand what it is really that should it inform to Emaswat, and I think that's important. But looking at the global markets right now, the currencies to commodities and the equities, I think I want to ask, what is top of mind from Treasury? Just if we consolidate everything, where are you seeing the biggest risks and opportunities?
No, thank you for that question. I think what we have seen is that there's a lot of volatility. Right. So the market is not so stable, especially with a lot of change in policies from the US government and its posturing towards the rest of the world. So there is no certainty in terms of projections from anybody, certainly. But what we've also seen is that Donald Trump in the US have now got into... He announced that he's now chosen the Fed chair for next year, but he's still going to announce that, since we know that Jerome Powell's term is ending next year, and this is showing that now there is a bit of influence in markets coming from politics, which is something that we have, historically, is something that we have tried to prevent from happening. So now we are seeing that that influence coming in, and this guy. So there is a lot of expectation on the new guy, because he has put a lot of pressure in terms of this guy have to be aggressive in cutting interest rates in the US. So from a politics perspective, he's trying to lower the cost of debt, so that when people are taking mortgages, they're taking loans, those products are at a cheap, and to make sure that those interest rates are low in general in the country. So this is also a risk and setting a bad precedence going forward, because, as you might know, the government will change. Now Democrats will come in, and they will also be pushing for a different agenda. And that's why I think the Fed chair should be independent, and the governors certainly should be independent from politics, which is, I think it's a new risk that has come into the arena.
And absolutely. I mean, I think we've all been awake to for lack of a better term, the friction between Jeremy and Donald Trump. It seems as though they don't have the most amicable relationship. As if, in fact, it's not supposed to be the best relationship. They're not supposed to be friends. Everyone should be doing their job. But it seems as though Trump wants to have his hand and wants to have his control in what is happening there. But, you know, between me and you, do you believe that the next person in the chair will not be influenced by politics? And how can you guys make that a reality?
Thanks for that question, but it's going to be very hard to make sure that the next person is not influenced by politics, especially if the next person is handpicked by Donald Trump.
By Donald Trump, yeah.
So now his policies might be influenced by that. We're still going to see what happens, because currently we are projecting a lot of interest rate cuts, especially in SA and Swaziland. We are expecting it might be more in the US. The current projection is an interest rate cut before end of December in the US, which is also going to have a ripple effect in the market.
Yeah.
It's the same in the UK in terms of the interest rate cut expectation, which is why currently we are seeing higher prices of gold.
Yeah.
Because investors are trying to move their funds or prepare for that time when interest rates are lower, that they are holding in a higher yielding instrument, and currently gold is doing very well, so investors are moving towards it.
Yeah, I do want to, go back a little bit to the rand, and you mentioned we saw the G20, a lot of things that have been happening really in South Africa, because they also hosted Global Citizen, but it's a lot that has been happening there for a positive outlook coming out of the southern part of Africa. But at what point does currency volatility start to worry you from a treasury risk management point of view?
Yes. So on that perspective, I think there are different sides to, especially for FX, there are different sides. So every side represents a different opportunity. Currently, the FX, the rand is very strong. So this is a big opportunity for importers.
Yeah.
And on the higher end, if the rand is weak, now if you're an exporter, that's an advantage for you. So it's just that different industries have to make sure that they take advantage. Of those opportunities and make sure that they make the most of it.
Yeah, and indeed, just right across the board.
Yes, so in terms of the rand, it's currently at 17.0904. It's worth highlighting also that we've seen the rand go to 16 recently, which was a big low in recent times.
Yeah.
We've seen GBP, it's at 22.68. The euro is at 19.92. We've seen the euro dipping below 20 quite often recently, which is also showing the strength of the rand in recent days.
Yeah. And
as you have highlighted, the positivity around South Africa has been heightened recently, and we are seeing the results of that in their currency, and we are also seeing that with the JSE Ultra, which is
interesting movements indeed. And as we get into commodities, of course, we did highlight there's a gold strength and the oil dip, particularly in England. And I want us to get into that, how these two trends affect our revenue outlook as well as our import bill.
So in terms of gold, especially, let me first start with gold. For gold, we have seen recently, especially central banks, they have a high demand for these instruments. This is a global movement where central banks are acquiring a lot of gold. So currently gold is at 4,221. Yesterday it was at 4,100 we saw a spike overnight. Crude is at 65.07. So in terms of crude, maybe this is something to highlight, that yesterday we saw a dip. So the dip came from the fact that the US and Russia are where we were in talks, right? In terms of how to solve the issues around Ukraine. But unfortunately, those talks fell through, and we received news around 1 today that those talks fell through, and there was an announcement by the Russian media that there is no agreement between the two countries. So that's what led to the current spike, which is very unfortunate that there were no agreements between the two countries, which means the tensions or the war is going to still continue on that side. But going back to gold, in terms of gold, it's mainly investors moving towards that instrument because of the lower interest yielding assets in Europe and in the US. Because now what we expect to happen is that the Fed is going to cut interest rates, and the Bank of England is going to cut interest rates. So for investors there, it means that their bonds are going to yield a lot lower than they were. And currently gold is doing very well, so it looks like a best alternative for those investors. And it's December now. We are also going to see traders locking in their profits and then selling off probably the gold. But the volatility around gold is usually not too bad. It's usually stable and contained.
And I think, yeah, right now it makes sense why you always call gold a safe haven after everything that you've just said. But when oil prices move sharply, as we are seeing, and as you've explained, how quickly does that impact what you're modeling for inflation, for subsidies or fuel tax revenues?
Yes. So in terms of oil, unfortunately, oil sort of have a economics of its own in terms of it affects almost everything in the market. So an increase in price of oil might lead to high inflation, because even I would use an example of groceries. The groceries get into the shops because of transport. And so if you increase the price of oil, it will trickle down to almost everything, because it's that much of an important commodity in the market. So currently what we're seeing is that the prices of oil are lower than they used to be, because of, in the Middle East, there's sort of that agreement between Israel and Hamas, which is not perfect, but it's currently working, because there's a bit of stability in that area of the world. And as you know, the Middle East is the biggest producer of oil. So stability in that side of the world is very helpful for the market. And another portion of it is the US, because the US have stockpiles of oil. They reserve oil. Originally, it was meant for war, but now they are able to use those reserves to sort of influence prices or control prices, make sure that they do not move rapidly, or they are not as volatile as they can be. They can sort of increase or reduce supply when they see the need. So that's why the prices of oil are sort of stable in the US, and in recent days they were lower because there were reports that the stockpiles in the US are very high, which means there's a lot of supply of oil.
Yeah, knowing the US, one could argue that that was intentional, that they stockpile not only for, but also to control the market. But maybe getting into the equities, S&P 500 is strong, and the FTSE 100 is lagging behind. Talk to me about what is causing that divergence.
So in the US, it's unfortunately in recent times, it's hard to talk about the S&P 500 without mentioning tech stocks.
Yes.
Unfortunately, we have seen a very sort of the S&P being tech heavy. So
Sure.
movements in tech will eventually influence the movements in the S&P. It's currently up at 6,800. It's 3.70% increase. But this time around, we have also seen Boeing being a biggest contributor. Boeing is up 10.2%, and this is because they have announced, their CFO have announced that they are projecting higher sales of aircrafts next year, which will increase their free cash flow for 2026. That was a big positive. We have also seen Intel up 8.7%, which is at the back of a speculation of a deal between Intel and Apple, which is always a positive. If you have a deal with Apple these days, that's a positive. It's just like Nvidia in the AI space. We have also seen a Bitcoin recovery in the US market. So the significance of Bitcoin in this instance is that investors going for Bitcoin signals that they are now more willing to go for riskier assets, and equities are the first stop in terms of risky assets before you get there. So that shows that that shows the demand and willingness for investors to put their money on equities in the US. In terms of the FTSE 500, the FTSE 100, that dip is mainly coming from the England market or the UK market in terms of it have seen a very stubborn inflation in recent days, and we have also seen numbers showing a very low consumer confidence in the UK. So I think consumers there are now not spending as much as they used to, and they are being cautious with their funds and investors as well. So that's why their fund is currently low.
Well, Ngosi, thank you so much for your time. He was zeroing in on the global market movements, and he has really given us insights on what is happening with regards to the global picture that is shifting fast, rather, and indeed has helped us understand. Let's go for a quick ad break. We